Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Glagoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hello, Leafy Podcast people. This is Jennifer and Brian. Tammy can't be with us today, but that's okay because now we get to hog our newest guest and it's going to be awesome. Today we have someone who's an executive, manager, team leader, individual contributor who has an incredible background on things that we really want to talk about. He's done the first 100 sales. He invests in multifamily. He's invested in self-storage. He's going to talk to us about some very interesting asset classes. He's going to drop names, and currently he's out South by Southwest. So there's a lot of people going to walk behind him. For those of you who are watching on video, we might even spot someone famous. So this is exciting for us. So please let us welcome Dan Kryzanowski, and he's with Pinnacle Storage Properties.com and then a whole bunch more, which he'll tell us about. Hey, Dan, welcome to the show.
Hey, Jennifer. So great to be here. What's up, Ryan? How are we doing?
Awesome. Great. So yeah, let's kind of dive in and let's talk about some niche classes, asset classes that you're kind of into. Yeah. And, I think that's pretty interesting because a lot of people have kind of the general stuff, but maybe not some of these niche stuff that may be more interesting to them.
Yeah, like my buddy David Thompson says, it's riches in the niches. And we won't do any more rhymes with that for our PG listeners out there. But I think it's really true. David, Thompson Investing, and anybody I mentioned on the call, happy to make introductions. These are people that I personally invested with, vouch for, and just I think are just honorable folks. And David, like myself, international MBA, a foreign wife, invested around the world, kind of think a la crowdfunding before, with real estate ultimately becoming where it makes sense for you and your folks. And David's sweet spot are the manufactured housing community. So I say bringing these 1950s cookie cutters into the modern age. And then also RV and mobile home parks, which I think are going to be, the new kid on the block, the sexy thing here for the 2020s. So that's exciting. So that's something I think you always keep in, I think, the world of David. He was actually one of Joe Fairless's earliest, I'd say, mentees, almost from a mutual relationship side going way back. So he's here in Austin. For those folks who know me on the brand, I would say storage baby, and I usually say it a little more excited, but the coffee hasn't kicked in yet. Self-storage is definitely something, and we'll talk more, but just the supply demand of it, I think is always going to make it for a wise operator. So I've long considered John Manus, top COO, now leading Pinnacle Storage, Christine Alvino, one of the top marketers at FineView Marketing in the space. So storage in perpetuity, I almost say, would be a strong consideration for investments. And then, other folks, I say we have a benefit of everybody just coming to Central Texas. Sal Buscemi and I saw him recently over the weekend. He's up in New York just doing really cool stuff, and that focuses on tangentially with art lending and some of his mentors like Alan Snyder. Really cool stuff. And then just bringing it back to more, call it basic-ish real estate. Look at something like HJH Investments. They're great in the Midwest. Corey Hackerod, Ben Kogut. And I think they just have kind of the sixth sense when it comes to what's the kind of retail mall. Even though retail's going out of business, as they say, from a brick and mortar, there's still some huge opportunities. So, this is all. And then, finally with BV Capital, there's some really, Steve May, I think, is one of the top former economists. It's all the acronyms that you hear, but like in the good ways, not causing a financial crisis as a real estate investor. So, this has basically been my calendar the last week of calls I've taken. So this and the South by Southwest is just going to be all excited here and stuff.
This is exciting. Okay, so everybody, we're going to have all these names in the show notes. So don't sit there, because I started writing, right? And then I'm like, oh, Joe Fairless. And then in my head, I'm like, oh, we were just on his show and we're going to be on his show again. And then I was thinking in my head, and then I missed two names. So don't worry about it. We're going to have them all written down for you. Awesome. So that you guys, if you want to get an introduction, you just email Tammy at leafylegalservices.com, and she will get you the hookup, because that's what we're here for. And I think it's hilarious that we're saying things like self-storage and RV parks are sexy, right? Because
so sexy.
That seems so unsexy, right? Like, really, RV parks, you just, the old-fashioned idea of somebody there with their, with banjo outside, but it's not like that anymore. Now we have so many boomers that are starting to retire, and they are eschewing these large homes that they've done, and so they're downsizing left and right, which is opening up a huge rental market for people in different asset classes, for the boomers to get these condos and downsize. But then it's also opening up, like you said, RV parks and alternative ways for people to travel. And with Wi-Fi being ubiquitous in every single town, they are still as connected as ever. There's still, half of them are still working. They're just working in telecommute. The workforce is really changing. And that's my background. Last decade, before we really started Leafy Legal, I was helping businesses scale using remote workforces, primarily Americans workforces, because we have people that are surviving accidents that 10, 15 years ago they would have died. And our technology and our medicine is better. We have top talent. We have so many women and men going into the workforce, and then they decide, I want to start a family, and I really don't see how I can have it all. That's a myth and a lie. I'm going to have to go home if I want to have the life that I want and raise the kids the way I want. But yet they have all these skills, they have time, and they can be top talent for people willing to look, at having a person that they probably couldn't have afforded before. And now they're able to get them, and it's a win-win-win situation for everyone. So this is opening up great opportunities on our end as real estate investors. So I love that we're talking about it. So tell me a little bit about your journey. How did you even get into real estate investing? Tell us a little bit about you.
Yeah, so, real simple. Born in 1978, grew up in Scranton, PA. My father was a high school principal. My mom was a social worker. I worked for big companies early career, Merrill Lynch, General Electric. Everything was very standard from that standpoint. Maxed out my 401k was kind of the rule of thumb in the family. And, I had a gut feel. The first time I was in Austin, before Austin, really went gangbusters here, was 06, 07, or 08. And, I had a feeling that folks weren't just going to wear their khaki pants and go into an office for the next 40 years. And Austin was kind of on the forefront from that. So long and short, I was co-best man in a wedding where this gentleman said, I'm like, hey, what do you do? I flip houses. Interesting. What does that mean? 15% on your money. Let's talk. And then the big light bulb, he said, did you know you can also use your retirement? And I thought, wow. And he said, yeah, on every one of my deals, 20% of the money comes in from retirement dollars. I said, this is fantastic. So this was my first taste of it. And, initially went through one of kind of like the legacy custodians, then over to a checkbook control self-directed account, which Jennifer, I know you are an expert in here. And I think they're great to have the checkbook control.
Yeah, it's a big way to get your money to work for you. And
all the time.
Powerful. Yeah, I agree with you completely.
And, so originally was just becoming a first lien holder on some houses in North Carolina. And then, as I said, the whole storage boom. So my career in the early 2010s was with Sparefoot, actually, Capital Factory, who I'm sitting with here in the South by Southwest Bliss, was an initial investor in Sparefoot. Sparefoot had a great exit, but I got to really know all the folks in the storage space. So a lot of my money came in there. A lot of dividends then would come in for smaller investments, such as, female entrepreneurs that might be flipping houses. I mentioned retail, kind of where there's a unique play in a strip mall, some of the stuff that riches in the niches, that David's working on here. And there's just a lot of, as money comes in and out, and that is a secret back door behind me. So I won't show you the
secret
code.
door. What's behind the secret door?
That's all my money. So that's my here. Since being Philly, here's my Ben Franklin. So I got to give a shout out to my boy Ben Franklin. But that's how the journey went. And I've been, like you guys, very fortunate. I think, different communities for, here, those in Austin, Texas, or Central Texas. Ken Harris has a 1,000-person meetup. About 100 people show up with just, it's a very heartfelt, everybody, it's all servant leadership sharing. That's here Tuesday luncheon, which anybody that's coming to town, please let me know. I'd love to take you. And, all the other shows. And it's ranging not just from, I think, some of these mom and pop, as we talked about, I had a solo K way back when to stuff like take the likes of Richard C. Wilson and his Super Summit, family offices. So I think a lot of things that we shared here are also things of the caliber that Richard C. kind of offers to his, say private community or high net worth folks out here, things that are, getting that 10% dividend, getting good equity, paying 115 months straight. All of this is panning out. And, that's where I kind of see how, my portfolio and a lot of folks' portfolios are going to be going forward.
Cool.
Yeah, I think that's fascinating.
So I'd like to talk a little bit more about self-storage because,
Sure.
where do you see kind of the self-storage business going in the next, 5-10 years and what kind of, opportunities you think are in that?
Yeah. I think the Time magazine or the proverbial Time magazine article, storage, it's already hitting the headlines. So people say, get out when it finally, when your parents tell you should invest in this, as laggards.
Yeah.
But, at this point though, from a sub-market, and so let me take a little step back. There's 50,000 storage units in the country and only 10,000 are owned by the REITs and the big guys. So you have this tail of 40,000 mom and pop grandma, grandpas. And unlike banking, storage doesn't have to be regulated. So if I want to open, Capital Factory self-storage across the street or on a farm in Texas, I could. So what we're seeing is by, as I said, once again, kind of the factor of servant leadership and meeting folks and educating them across the country, we've had a lot of good relationships. So we learn of deals off market. And I share this because I think the spirit of the country is two things. One, from just a demand, what's going to happen? Well, grandma's going to die. There's going to be divorce. People want to be more minimalist. You want to finally take down the crib when your kid's 10 years old. All of this goes into storage. Your nonprofit, for example, your ex-books. So I don't really see the demand going away. In some ways, people say, well, millennials are renting less space. Well, yes, for where they live, but that means storage is even more sort of valuable. So from that standpoint, the demand is not, they say 1 out of 10 Americans use storage. It's probably going to go up a little bit at any time, especially with folks' side businesses. And then from the supply, I think there's going to be a glut of, I'll call it pretty. There's going to be a glut of, downtown pretty or refurb, and probably public storage, frankly, is going to take it. Havner, the CEO, said we have more, either said we puke money or have more money than God, one of the two, but, public storage is going to do. But in the kind of suburbs, in the growing suburbs, in places that didn't have air conditioning and needs it, in the secondary, tertiary market, say 50,000 or more people, I think there's going to be, and technology will pick up. I think there'll be more, you can actually enter 24/7 because you're going to have your own gate code, your own fob, where it's hyper secure and to go in. So that's where I think the technology is going, which is going to be frankly more attractive for folks that aren't limited by a 9 to 5. So I think in certain submarkets, it's still going to be, if you operate well, it's still going to be a very attractive investment. And frankly, Americans, I think in their mind are almost going to assume, much like your cell phone, you have $100 a month fee that you pay because it's not the stuff you want to look at every day. So I think the world's kind of moving towards that, which is frankly very beneficial if you're an owner or investor in storage.
So looking for like a self-storage place or something like that, what kind of factors would you look into if you say you want to buy something that may be existing?
Yeah, so I think existing's key, once again, because you want to have the ability to cash flow to your investors on day one. So take Pinnacle's journey on their first 20 deals, which is relatively large. Once you're 10 or more, you're very large, for a potential acquisition or just a player in the space. We'll say, hey, we're going to give you a flat dividend, a stair-step dividend, or, we're not going to pay dividend for 2 years, but we're going to build something in back without asking for money or diluting. So we're going to take these cash flows, say we're going to throw some boats on or build another 200, I call them squares, another 200 squares. And then in 2 years, by this time the value is going to double and we can kick out dividends. So although nothing is, it's not truly recession resistant, but it's pretty recession proof. I think, one of the REITs went down 0.08% in 0809. It's pretty solid.
Yeah.
So I like to tell folks, worst case, two things. I just say guidance, and nothing's in the absolute, but it's kind of an investment that's going to pay a dividend in perpetuity, larger than anything you're going to get from, an annuity, a bond, et cetera. And then secondly, if stuff really hits the fan, especially if an entity's 10 or more, it's probably going to be bought as a portfolio, or you have a physical piece of asset that can be refurbed into warehousing or logistics relatively easy. So it's the bones are good, as they say.
Yeah, that's interesting. Is the financing the same too? Because I'm not really familiar with how it's all financed. I don't know if it's considered by the banks and it's probably commercial property, and I'm interested to know on that too.
So it's a commercial property, and by no surprise, there's folks that tend to that focus on storage or as a one of their niche asset classes. So there are some experts here in the space. Let's just talk a very vanilla deal. Vanilla, secondary, tertiary, take College Station, Texas A&M is there. 500 unit place. Let's just use round numbers. $5 million property, $1.5 million equity raise, $3.5 million debt raise. Probably at some pretty favorable, as favorable as you're going to see for other sort of CRE properties. And then, basically no surprise probably to folks here, the private money coming in or the true friends and family or the family office that you're engaged with is going to give you pretty fair equity terms versus, I think Pinnacle, it's turned down over $1 billion with the B of private equity money, just kind of crazy terms. It's just, guys, it doesn't make sense,
Right.
So that's interesting. So if you're an investor looking to get into self-storage, but you don't know of any private deals and you want to go to pinnaclestorageproperties.com, how do you vet your investors? Are you still vetting investors that are coming in, and how is that working?
Yeah, great question. And I'm more than happy to share my experience. So I'm a finder here in Texas. Real simple. I won't spell my last name. We'll be here all day. But Dan, Dan at pinnaclestorageproperties.com. Reach out to me. But otherwise, as I said, the spirit of Pinnacle is to educate. So from the PDF, the videos, I know John Maness, especially in his first year, probably put 100,000 miles on his car, educating folks across the state. So, that said, if somebody is, they say, hey, 50,000, my kid's tuition, I have two twins that are 17. Well, it's my life savings. No, definitely not. Flip side, maybe I have retirement, or I like having yield because of the stage of my life. I've been in real estate my whole life. Or, I'm willing to put my money in something above a CD. My kids are 12, 10 years old, and we would feel confident the property is going to sell in 5 years. Sure, you're going to get your principal back and dividends coming through. So kind of looking at the scenario of where they can go, very happy to show. And kind of going back to our earlier discussion, just on the demand side, we can go into more points on why, we feel there's going to be consistent demand, particularly in a submarket.
It's interesting that you talked about different types of people at different stages and how they're going to be looking at real estate investing in different ways. So if you're new to our show or you're curious, there is a type of investing for you. Right? There are many different ways to get in the game. You can be brand new, go into college and decide to do a house hack, for the 4 years that you're there in town because you're single, you have no kids, and you have a good deal that you found on a duplex. There's lots of different ways to get some skin in the game. But what about you? Based on your journey, do you think anybody can be a passive investor or active real estate manager?
I love this question, and I'll take the easy one first, of course. A passive investor, yes. And here's why. And I've had many, as I said, our Capital Factor, I also mentor a lot of folks in their 20s, and they ask a very similar question. And I say, the great benefit for you is that you can even put $500, $1,000, maybe even $100 in a crowdfunding deal. You can read the top level metrics. There's probably some pretty good protections on your side also, that you can go in for very low risk in terms of nominal dollars to see how a deal plays out. And that's at any age. So that's very sort of exciting for me. I know many private lenders, say if you're doing a hard money loan, they'll accept down to, even if they normally accept six figures, down to 10,000 just to say, okay, we're going to peck on the cheek over the next 6 months. Totally fair. And that's frankly somebody that you probably do want to get in bed with, down the road for your 6 figures. So, with that, to be a passive investor, I think a lot of folks, you don't have to be a huge econ expert. And especially that's why I like things like storage, because it's literally blocks and linear. It's very, there's no people involved. It's very simple. To be an active manager, to physically actually manage property, let me take it to the other side of the extreme. No, it's not for everybody. I can't change a light bulb. So I'm a little hesitant. That's why I have stuff like storage and coming as an LP and then at times a GP versus, saying I'm going to buy 10 houses and try to fix them, or think I know how to manage contractors, and even actively managing your portfolio. For example, now some of the aforementioned investments that we talked about here, like my widowed mother, I manage a little bit, not all of her money, but some on the private side. And it comes down to, I think, a trust factor. So if you're wired, and I joke growing up in the Northeast, kind of beaten down by the Catholic Church or wherever it is, that you have to listen to the person, the man, top down, then no, maybe it's not in your appetite. But I'd say most folks our age, and then particularly the younger generation, should consider actively managing to the point. And then a final thing I'll say, not to scare some of our older listeners, but in case you have you own properties, or you're sitting on literally millions of dollars or multiple buildings that are kicking passive income off, you really should get a little active. If it's a typical 60-40 stock split and you're 70 years old, you may not have any income left or any even principal left come 90 years old. I know it's a pretty long timeline, but a lot of folks, frankly, aren't that fortunate because of life situations. So I do think, you have to get active, whether it's you or somebody that you trust, at least on a portion of your portfolio.
Okay. That's interesting.
Yeah, that is interesting. What do you say? Okay, so this is a hard one because you've talked about so many, but what is your personal favorite asset class?
Storage, baby. I love it. I just think it's right place, right time where I was. I mean, Sparefoot was a fantastic experience. To the grave, I'll say best company I worked for, with Chuck and Mario as their founders, and getting to meet everybody. And yeah, there's just such a unique dynamic about it where it's refreshing. And now I just think it's great. And especially for the folks that have been in it, it's a tight community. It's very collaborative. And I think the bad actors are kind of weeded out, pretty quickly. So I like that. But in a similar way, I mean, look at somebody like David Thompson with the mobile homes, RV park, the MHCs. You're getting people that are, that truly view it as a win-win. And what I mean by that is, somebody may retire, maybe they're coming on the military, they have a TSP-like pension. Not much income is coming in, but he's not going to jack up the rents for a few more points that maybe you see traditionally on the CRE side. So I would say, and there's many, there's a few other good stewards here, between say Austin and Dallas, I know on this, I'll call it RV craze, that are really doing it for good reasons, basically to build a community, not to eke out an extra few dollars. And it's a true everybody wins. And I think, Jennifer, you said earlier, I think that's where a certain percentage of the population is going. So I think if you do, and I think you're right, with internet now, I can be moving into a different state and be like, hey, I heard this is the owner, this looks like the management company. Should I go here? Because there's probably something else within a 10-minute radius. So, those are kind of the two exciting ones. And then, you don't want to let these, every strip mall be like a relic of the 80s and things kind of crap out. But there's a lot of interesting things. I mean, whether cannabis or hemp CBD comes into your state, that's probably going to fill up 20% of the space. Ethnic restaurants. There's a lot of things with well-being, I think. So I think there's a lot of things, especially in like these 1980 B style retail, that could be done also. That I'll put that into a niche.
Yeah, well, hey, we just went keto in my house at the beginning of the year. So now it's like, I cook all the time, but just finding keto recipes or places to get keto, it's a lot of cooking, right? Well, it's hard to have a lot of cooking when you're working all the time and everything else. So we managed to do it. But I think that we're going to see that too. You're going to see these stores that are catering to people who have celiac disease and they have major gluten intolerances, and people just wanting to have healthier source food. And of course that grows an entire niche of farmers and farmers markets and different places they can go and sell, their natural honey that helps people with allergies and all the other great stuff that goes along with it. So I think so. Well, this has been really fascinating, but we're going to have to wrap it up. And I hate that. So everybody, we've been talking to Dan Kryzanowski, and you can reach out to him at I messed it up. PinnacleStorageProperties.com. That's Dan at PinnacleStorageProperties.com. We're also going to have Eagle pig-eared Tammy, hint, hint, Tammy's going to do it. She's going to write every single one of the names that we've dropped and the information about this, because this has just been so heavy information for everybody just to go and feel like they have got the hookup. Now we've given you names. And so thank you so much, Dan, for being here and doing that and making us feel like insiders so that we can launch our real estate investing and entrepreneurial dreams. I appreciate you very much.
Awesome, Jennifer. Such a pleasure to speak with you and Brian, and I hope to do it again soon.
Absolutely.
Okay, great.
All right.
Okay.
Thank you, Dan.
Thanks.
Okay, and as with everything, guys, you just have to reach out to Tammy at leafylegalservices.com. Please be sure to rate us on iTunes, Spotify, Stitcher, whatever is your favorite mode to listen to us. Leave us a rating. That really allows us and lets us be able to reach out to more guests and to have great content for you guys. So until next time, everybody have a great Leafy week.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit leafylegalservices.com. They are waiting to hear from you. leafylegalservices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.